Ever look at your overflowing savings account and wonder, where on earth does all this money come from? It seems like magic, right? You deposit your hard-earned cash, and the bank conjures up more to lend out. But fear not, curious minds, the magic of banking is built on a surprisingly simple foundation: trust. That's right, trust. Think about it. You trust Commonwealth Bank to keep your money safe and accessible. In return, the bank trusts you'll need that money someday and won't all come knocking down the doors at once. This beautiful dance of trust allows the bank to work its financial alchemy. So, how does Commonwealth Bank actually get its money? Buckle up, because it's a multi-pronged approach. Deposits, this is the big one. You, me, everyone, we're the foundation of the bank's resources. Every time you deposit your paycheck, your rent money, or that birthday cash, you're essentially lending the bank your funds. Term deposits, looking for a higher interest rate on your savings? Term deposits are a popular option. Here, you agree to lock away your money for a fixed period, and the bank rewards your patience with a better interest rate. This gives them a predictable pool of funds to work with. Wholesale funding, ever heard of the interbank market? It's a playground for big institutions like Commonwealth Bank. Here, banks borrow and lend money to each other, often overnight, to manage their cash flow. It's a complex system, but it helps ensure all the banks have enough liquidity to operate smoothly. Now, these deposits and borrowings are just one side of the coin. The other side? Lending. This is where the magic really happens. Commonwealth Bank takes the money you've deposited and uses it to provide various financial products. Home loans, that dream beach house or cozy suburban haven. Commonwealth Bank might be the key. By using your deposits, they can offer home loans, allowing people to buy property and pay it back over time with interest. This interest income is a significant source of revenue for the bank. Personal loans, need a little breathing room for that unexpected car repair or a dream vacation. Personal loans are another way Commonwealth Bank puts your money to work. Again, they charge interest on these loans, generating income. Business loans, the backbone of the economy, small and large businesses often rely on loans to grow. Commonwealth Bank steps in, using your deposits to provide businesses with the capital they need, and again, earns interest on these loans. It's important to remember that Commonwealth Bank doesn't just hand out piles of cash. They meticulously assess borrowers' creditworthiness to ensure they can repay the loan. This minimizes risk and protects your hard-earned deposits. But wait, there's more. Commonwealth Bank also offers a range of fee-based services that contribute to their income stream. Account fees, there are different types of transaction accounts offered, some with monthly fees and others with fee-free options. These fees provide a steady source of income for the bank. Investment products, want to grow your wealth beyond a savings account? Commonwealth Bank offers investment options like managed funds and brokerage services. While they don't directly invest your money, they facilitate these transactions and earn fees in the process. Financial planning, need guidance navigating the complexities of personal finance? Commonwealth Bank offers financial planning services, charging fees for their expertise. So, there you have it. The money Commonwealth Bank uses comes from a combination of deposits, borrowings, and fees. It's a complex ecosystem, but the core principle remains trust. By entrusting your money to the bank, you're not just keeping it safe, you're contributing to the financial well-being of individuals, businesses, and the broader economy. With that said, thanks for watching, and until next time.